Today, the stock market crash was avoided. However, is this the calm before the storm? We look right here, we still see that Israel may respond, and they've been telling us they will respond. And what effect is this going to have on the stock market? And let's go back and look at in past times. Now, we come over and look at geopolitical events in the past. And we start off, we look at Pearl Harbor. Way back then, we see one day the stock market dropped 3.8%. Total drawdown was 19.8%. It bottomed out 143 days later. However, it took 307 days before it finally recovered. When we had the JFK event, we see the market dropped 2.8%, was only down for one day, and then recovered and started going back up. And you guys can read through this. This is on Market Watch. You guys can go through all the different events that we've seen. But when we scroll on down and we look at the final tally, I want you guys to pay attention. If we look at the average, right? We can see the average, the market bottoms 22 days after the geopolitical event. Then it takes roughly 47 days before it finally recovers and makes a new all-time highs. So is that the path that we're going to follow this time around? Or is this time going to be outside the norm? I mean, either we recover a little bit faster or a little bit longer. You guys let me know what you think in the comment section down below. Now we take a look at Nike stock today. Yikes, was down 6.77%. We look at this article right here. Nike still not out of the woods. Analyst says as stock drops after earnings. And again, earnings can be a big driver for stocks out here. Nike not really looking that great. We had that big gap right here on that earnings event in the past. Then we've been trying to work our way up. We barely missed hitting the ABC structure on the way up. Then boom, rug pull right back on the way down once again. We look at how the indices fared across the board today. The Dow was up 39 points. We had the Nasdaq up 14.76 points. S&P 500 up 0.79 points. Russell 2000 down 0.32%. Now, when we look at advancing issues versus declining, we had 50.6% of issues declining on the day. 45.5% of issues advanced. And now, I don't know, I'm not the smartest individual, but I believe if we add this up, that does not equal 100%. Then we come over and look at the sectors across the board, and we can see energy leading the way, followed by technology. The big laggard out there today was consumer defensives, and a lot of that was simply because they ran a lot yesterday. Then today, there has not been any further action with Israel. We look at the fear and greed index. We are sitting at 69, still well within greedy territory. Are we going to be able to swing back over to extreme greed? Or are the bears going to come back out and push us back to the neutral territory? We come over and look at the dollar index. Dollar index was very strong today, and the MACD indicator has been very encouraging. Now, one of the areas we've been watching is this structure breakdown point. The low of that area is going to be about 102.17. all the way up here towards about 102.53. Keep in mind, if we can bust through that area, we have another area a little bit higher that we could come up towards about 103.64. Now, with a stronger dollar, we normally anticipate that gold is going to have a bearish day as well. We see today early on, gold was getting slapped down only to come back up. But when we look at gold, what do we see? Nothing more than an inside day. The high was lower than the prior day. The low was higher than the low from the prior day. So what do we expect? Tomorrow is likely going to be a breakout or breakdown from this pattern. We've already completed one ABC pattern. And normally once we complete an ABC pattern, the market does something other than continue in that direction. That could be consolidate, or that can be a pullback. So far, it's only been a consolidation. I'm still watching for this area down here, about 26.72. Now we come over and look at crude oil futures real quick. What do we see? We have a candle of indecision. Big wick on the top, big wick on the bottom, and we basically open and close relatively in the same area. Now today, we were just barely able to push above that swing high. So for all intents and purposes, we do have an ABC pattern to the upside, which should complete about 74.28. Now, the invalidation point for this pattern would be if crude oil comes all the way back down below 66.34. Now, I forgot to mention this yesterday, but the VIX was up more than 10%, which indicated that today was likely going to be an up day in the market. And 3 of the 4 indices today were up. We see the VIX today down 1.87 points. Tesla today actually getting beaten up here a little bit, gapping lower, but again, closing with a hammer candle. Is the market building up strength to go ahead and try to run up and go a bit higher? As we come over and look at the S&P 500, you can see we dipped down. We have been able to get into the gap of the day after the FOMC statement. However, we still have not been able to come all the way down, filling the gap. We're having a hard time really pushing through this minus development area. And keep in mind, we have this high volume area about 561.82, which should act as a target. One thing to be aware of is the MACD indicator is just about to cross over to the downside. Then as we come over and we look at the 4-hour chart, MACD indicator does have a bearish cross, but pay attention, all right? for all intents and purposes, the market has not been pulling back. Even though the MACD indicator does have a bearish cross, we're still hanging up here at these upper levels. Then as we dive down to a 30-minute chart, notice we didn't do a whole lot today. They spiked it down. We took out the lows from yesterday, and then we rallied back up a bit. But for all intents and purposes, today was nothing more than kind of a consolidation area. Now, this is going to be critical. If we do this again tomorrow and the MACD indicator gets a chance to work back to the zero line, watch out. That could be nothing more than a recharge point for another leg lower. But one thing I will say, we have a P as in Paul shaped profile. If we can get above value area high, we're likely going to come all the way up here towards this box at 571.22, and then see if we can come all the way to the other side about 573.99. Now, I want to make everybody aware, Apex have an 80% sale off all their valuation accounts, passing as little as 1 day, and only $35 reset fees. If you want to take advantage of this offer, use the link in the description box down below. Use promo code Mike at checkout. Then as we come over and we look at the futures markets real quick, here's some levels that we had mapped out. We were watching this level throughout the live stream today. The market made it there. First time we came up, boom, we get a rejection back down. Now we're back up in that area again. Will we be able to push up and out, possibly making it to this other minus development area? Now, I want to go ahead and clear these levels off this chart real quick, because right now, as I'm looking at this weekly profile, we do have a minus development area that has been developing, and you can see we got into it once. So if we can come back into it once again, which comes in at a price point of about 57.71, we're likely going to the other side at 57.74. We breached that. We're probably coming back up towards the wick of this candle about 57.82. Now, as we come down and we look at the daily profiles real quick, what do we see? Well, we talked about this on the live stream as well. And if you guys don't want to miss the next live stream, make sure you're subscribed and you have the bell notifications turned on for all. But we're talking about this A to B equals C to D pattern. And as we look at this, it completes right up here at 57.96. Now today, we were also watching this minus development area, which really is all the way up in this zone, right about up in here. And that's going to be anywhere from the ballpark of 57.87 to about 58.01-ish. And that ABC projection would complete right within that range. Now, in order for this pattern to be validated, we must break above the swing high over here. If we break above the swing high and then we come back down below this swing point right here, which comes in at a price point of 57.48, then that would negate that potential pattern. But again, we're in a wait and see. I do think we're going to try to bust up and out. However, if Israel goes on the offensive, we can see some volatility in the market. As we look at value area high, we can see it comes in at 57.66.00, with the point of control being right here at 57.63, value area low down here at 57.47.50. Now note, if we end up failing this ABC pattern, meaning maybe we come up towards this area and then we start coming back down, if we break value area high, I want to target the point of control. Anything below that, I either want to target this distribution node right here or all the way down here towards value area low. Below value area low, I will be looking down here towards the low of today. Now, if I'm looking to test a spike, I'm normally going to front run that order. I'm not going to go right to the tip of the end of that spike. I'm going to kind of front run in the general vicinity. Now, as we come over and look at the QQQs real quick, for all intents and purposes, we still have this larger ABC pattern in play on the daily chart. We can see that we still have the gap from the FOMC day that still needs to come back and get filled. MACD indicator looking a little bit weak, but we have not crossed just yet. And we're spending a lot of time within this high volume area of the composite profile. We really need to be able to push up and out. I'd say get above 486.27. We get above that, we're coming right back towards the swing high over here. And more likely than not, we're going to break that swing high, retest this volume spike at 496.14. Anything above that, we can go back and look for a retest of all-time highs and then push in towards 510.33. Out here on the 1 hour chart, we can see the MACD indicator is below the zero line. We do have a fresh cross, but what I would like to see is maybe a double bottom pattern. We come back down to the double bottom, then see if we can come back up and start trying to break up and out. If we come down, we break these swing points and we're not firming up down here, watch out, we're likely going to go substantially lower. Out here on the 30-minute chart, you can see we have a P as in Paul shaped profile. And notice one of the volume profile levels we talked about yesterday was this minus development area. We came right into it and we spent quite a bit of time with that area today. I'm going to go ahead and remove it off the chart for this time being. Now, you can also make the case that this is nothing more than a little bull flag pattern that was forming today, which should take us back into this minus development area somewhere around 486.68. Be on the lookout for that area. We breached that, then we're looking back for this minus development area a little bit higher, about 488.26. Now, when we look at the economic calendar real quick, we can see today the ADP non-farm employment numbers came in a little bit hot, 143,000 versus a forecast of 124. previously 103. Now we're not out of the woods yet. All right. Tomorrow we have more economic news coming out as well. 8:30 we have the weekly unemployment claims. 9:45 we have final services PMI. Followed at 10 a.m. ISM services PMI. And we do have an FOMC member speaking. Actually, we have two of them speaking. One's going to be speaking at 10 o'clock. Then Bostic speaks over here at 10:40. So we do need to be mindful of the news events coming out tomorrow. Then on Friday, we're going to have the big daddy of them all, the non-farm employment change. Are we going to come in hotter than what is expected? Or is it going to come in a little bit weaker? You guys, let me know what you think in the comment section down below. Now, if we look at the diamonds real quick, the Dow Jones, what's going on up there? You can see we have a lot of these buying tails on the bottom of the candles. So are we going to be able to push up and out of this area, or are we getting ready to fail? Keep in mind, we still have that ABC structure to the upside at about 430.21. Then as we dive down, we look at the Russell 2000. Notice we're spending a little bit of time at this 38% retracement. If we start to give way, watch out for the 50% level to come in between the 50 and 61.8. And I do like the 61.8 a little bit better, maybe even overshoot that a little bit, fill the gap right over here, and then set up some type of ABC pattern to the upside. See if we can go ahead and continue to push up higher. Keep in mind, in the short term, we do have geopolitical risk at bay that we need to pay very close attention to. Now, if you guys want to learn how to set up quant tower with fast track trading, make sure to watch this video right here.